Why is the private sector, they don't have a political agenda. Why are they ignoring overwhelming evidence of a recession to pretend that we're still in an expansion? Because the Fed is pretending it too. And so instead of believing their own eyes, they believe the Fed. And they ignore all the data that the Fed is ignoring. But even if we ever had a real recovery, it's over. I mean, come on, how much more evidence do people need that the recovery is over than the data that's been coming out? But if you look at what's happening in the markets are figuring it out, right? It is a slow process, but it is gaining traction. Look at the dollar index. It got clobbered yesterday. In fact, the dollar index was trading above 97 before the Fed announcement came out. It's now trading below 95, 94.80. We've got support at about 93.80. It's about a full point lower. That was the double bottom, really, from October and May of last year. But I think once we take out that level, and we could take it out very quickly, it's going to be a precipitous drop down from there, because this whole dollar trade is going to unravel fast because everybody is on the wrong side of it. Meanwhile, the price of gold was up $30 yesterday. Not a new high. Right, we're not back above 1280. It's up again today, a few bucks. But gold stocks, another story. Gold stocks were up. I think the GDX index was up about 7% yesterday. Gold right now is trading about 1265. So it's still about 15, 20 bucks off of the highs. But these gold stocks made new highs for the year. And what's even better than the gold stocks are the silver stocks. In fact, silver has now, after having lagged, and this is something I've been saying for a while, and I know I've seen a lot of people out there saying, buy gold and short silver, and I thought that was a foolish trade. Well, silver now is making new highs for the year. It's now leading gold, and the silver stocks, these stocks are really on fire. So the gold and silver sector is showing you that people are figuring this out. Money is figuring this out. Money is now starting to move in a bigger way out of the dollar, and the dollar is down across the board, right? When I'm talking about the dollar index, right, you're talking about mainly the euro, a little bit the yen, the pound, but the dollar is getting creamed all over the world. South America, Southeast Asia, and the momentum in this trade is going to build. It's going to get bigger. It's going to get bigger and bigger. And of course, ultimately what that is going to do is that's going to push upward pressure on commodity prices. Oil prices now back above $40 a barrel. That's going to keep going up, all commodity prices, which means all this deflation nonsense all around the world, that's going to go away, and there's going to be upward pressure on interest rates around the world. But here in America, it doesn't matter. It doesn't matter about the upward pressure because we can't afford the higher interest rates. Remember when the ruble was under attack last year, and Putin, they had to raise interest rates up to 17% to stop the collapse of the ruble. Obviously, we can't do that in America. How do we stop